the Australian Stock Market Show. We do hope you've had a great week so far. We have a special quote for you, and it's from someone you all know. It's from Dale. In our decades of experience in working with investors, it is a lack of confidence that leads to procrastination in making decisions. And these investors know following a path that builds confidence will allow them to move from where they are today to where they desire to be. It is our aim tonight as we answer your questions and bring you our upfront, no BS approach to all things stock market to help you gain more confidence so that you can make better decisions. Our main topic for tonight is top 10 growth stocks to buy in 2022. Hello, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. How are you tonight?
I'm good. One night I'm going to be the host because you always get to be the host.
Okay, let's do that then. How about the last show for the
last
year?
show for the year? I'm the host, eh?
That sounds good.
Do you reckon I do a good job, guys? I think I do a good job, wouldn't I? You can be the sidekick and you can do all the jokes.
Okay, I think they fall flat. Your jokes are really good. I don't know where you pull them from.
Don't ask. All right, well, before we get into our first segment for tonight, what we need to do is, again, take some live calls on the show. So if you do want to chat to Janine and I and ask us your most burning question, then this is your opportunity to pick up your phone and call us now. Now, the number you need to call is 0392909988. That's 0392909988. Now, to get things started, the first person to call into the show right now will get a free copy of my latest book, Accelerate Your Wealth. Now, both Janine and I are really keen to chat to you, so make sure you pick up your phone right now and get dialing.
While we wait for you to call, it is the 5th Tuesday in the month, and this means that we've got a hot tip. So let's get into the charts.
I thought you were going to say, let's get a drum roll.
This is a hot tip, and it's exciting, isn't it?
On your screen right now is the stock that I've actually brought up for this week for our hot tip. Now, I know hot tips in the past I've had 360, Life 360, and I did Atomos. Those are the last two. This one here is Appen. Now, I know we've had a few people asking us about Appen a few times.
Now, is this a short-term proposition that you're showing here?
No, I think this is more medium-term, this sort of one, but it could be short-term okay. I've just put a couple of basic things on here without getting technical, and I just wanted to bring up the monthly chart first, just to have a really, really quick look at this and just see this whole big move down here. If we look at it, we see how far it's actually fallen.
So are you saying that investors should look for something that's fallen significantly? Is that what you're saying?
Absolutely. Don't try and buy. You can't buy yesterday's returns. So this has fallen 80.85% right down to that low last month at $8.36. So realistically, you know where it's been to. It's been up at $40. Currently, it's closing there at $9.59. So there's a huge difference between
So if the trend is your friend and this one is down, clearly down, why is this an opportunity then?
Because I'm a contrarian.
Okay.
Would you like me to spell that?
That's interesting.
Okay, because I'm a contrarian. But what I was suggesting is come down over 80%. Now, generally when stocks, fall this much, they might even go to 90% of that all-time high. But it looks like it's finding some support there. And really, this grey line is just drawn across that first big low there and those ones there. And it just really has just come back to its normal momentum because it really did overheat back through into 2019 and 20 as a lot of investors jumped in on this sort of stock. So now it's really come back to its normal momentum, but I'm not saying it's not going to go nicely from here. It probably won't do this sort of thing again, but I think it'll settle into a nice little rhythm now. So let's go and have a look at the weekly chart, and I've just put a couple of other little things on here just to share with people why I'm looking at it. Now, I did look at buying this a few weeks ago just in this sort of area here, but I was still a little bit suspicious of it, if that makes sense. And with the volatility at the moment on our market and the heightened emotions that we're seeing on the market at the moment, I want to err on the side of caution. And that's what I was talking about with our assessors and our traders in our team today. I was actually chatting with them and I said, look, when you're working with students at the moment, just let's err on the side of caution because right now anything can happen in the market. And last week, that really proved to happen with this week. And I'll show you what happened there in a minute on the daily chart.
It actually had a false trigger, didn't it, prior to that?
It had a false trigger.
So can I just have a look at that for a minute?
Yeah, you can.
Okay, so if we go back here, I think it's interesting how the stock actually rose strongly here over a number of weeks, but then it reversed, and it's done similar here. So it's following the same sort of pattern. So at the moment, it hasn't proven that it's going up. It could just as easily take out this low again.
Correct, and that's why I'm saying it's a little bit early, and I'm erring on the side of caution, because if I look at this, it's also got some support across this sort of level around that $8 sort of mark there. So it's got some really, really nice support there. So at this point in time, what happened last week, if I go to the daily chart, you can see that was Friday, that big move down Friday. There's yesterday's bar, and today it's just up a little bit. So to me, this deserves sitting on your watch list. It may not take off straight away. It may be a few weeks to get some momentum. But if it got above this sort of area there around that sort of $12.30 mark, I think I would be much more comfortable with this. But really above this sort of level, that sort of $14, $15 mark, if I got through that, you don't need to be too fast on this one. And that's why it's more medium to longer term.
Well, thank you very much for your insights on Atomos. That's great. And that's all from us, isn't it, for now on that hot tip?
That is.
All right, let's get into our next segment here. We've got our first email.
All right, our first email tonight is from Chris, and Chris says, "Hi, Dale and Janine. This is a question regarding Atomos. I'm just wondering what comments you could make on today's trading." Now, the company released a positive guidance announcement which saw the stock leap in price but then plummeted, and there's been very high volumes. Now, I don't own the stock, but I'm just wondering if you think there is some manipulation going on, as it all seems very strange considering what was a positive announcement. It had such a volatile effect on the stock. Kind regards, Chris. Now, Chris sent this question in late last week. It was too late to get into the show, but I really liked it because this was a stock that I did for my last hot tip back about 3 months ago-ish, when it was around $1. Now it's back again around the dollar.
Right, so potentially another opportunity, do you think?
Yeah, but it also has highlighted, we had a lot of people said they bought the stock after the tip, but then they were emailing in or asking questions, what should they do, because it started to fall away. So a lot of people bought on the tip but then didn't know how to sell it.
Yeah. Well, what do you say to people about that?
Dumb.
Why is that?
Well, because you should always know how to sell. It doesn't matter. Just because an expert gives you a tip doesn't mean you just go and buy. You need to understand the stock yourself.
That's true.
And understand how you're going to manage it and sell it. This is why so many people get poor returns. They just go, oh, Dale or Janine said this, or Joe said this, or Fred said that. I'm going to go and buy this stock. And then they don't know how to exit. And at the time I said, this is a small cap stock. You've got to be careful.
So can we, because we were talking about, you've talked about APX, which is Atomos, and you've talked about Appen. So if people do go and buy something off
Appen's safer than an Atomos.
Yeah, but if they go and buy a stock that's been talked about, don't buy it. If they go to buy it, they're interested in it, you would say to them, don't actually buy it unless you actually have an exit plan.
Well, unless you understand the stock and you have an exit plan and you understand what you're going to do. At the time with Atomos, we said it could be a short-term run. I think it could go up quite nicely. I said, just be careful. It is a lower cap stock. It's a low cap stock, so it should be more. And I'm pretty sure I said you need to be a little bit more experienced to get into it. I don't have that same reservations with Appen. Appen's a much bigger stock. It's a much better stock, so I don't have that. But what this stock is doing at the moment, I still love Atomos right at the moment. And, we use their products here, and I know people that work there. And I'm not saying that from insider trading point of view. I don't know how they're doing their business. But the question is
their products
what
really
happened last week with the news? Now, how often have you seen positive news and a share price goes down?
Often.
Often. It's probably more times than it goes up.
But it's so confusing for people to experience that. They're thinking, well, why is it that these shares have gone down just after they've announced a good result?
It's real easy. When's the best time to sell? When everybody wants it. It's pretty much, that's the answer is, when you release good news, then every retail investor goes, oh, good news, I'll buy in on the stock. The big entertainer knows that, so therefore the stock price falls away because the big entertainers, they start selling into that buying demand, and so they push it right down.
But when did the biggest fall, or when did the announcement happen? Because the biggest volatility was just last week.
Well, this would have been last Monday or Tuesday, I'd say.
But it was already well and truly falling before then anyway.
It was already falling heavily, so it just made it accelerate.
It had already provided an exit.
But I do like it right now. It's just a little bit too early on this stock. The dollar seems to be a good area for it to find some support. So
I think it also is a flag for people because of the volatility of it. I think that should tell people it may not be the right stock for them if they're not able to handle.
Well, this was
the volatility.
proof that a lot of people couldn't handle a stock like that. And that's why we're very careful about saying to people, this is high risk. This is not a stock that beginners should be trading, or not experienced people trading. And we really do mean those words. That's what we're talking about. People
with less experience often trade stocks that hardly register on the ticker.
And they shouldn't be.
They're very liquid.
And they shouldn't be. Anyway, we need to take a caller, Janine. I think we've got our first caller for tonight. I think we have Matt on the line, do we?
Yes, it's Matt from the Gold Coast, Dale.
Oh, you're a good-looking dude too, mate.
I'm not sure about that. I'd have to look in the mirror.
Oh, I'll have to ask your wife, mate. So hopefully you've been staying dry in all the rain you've had up there. We've had all the sunshine and you've had all the rain for a change.
That's true.
You've got a question for us today, mate?
Yes, Pilbara Minerals.
Yeah.
It seems to be a real trading stock.
Yep, absolutely. Do you own the stock at the moment, Matt?
I do, and I've also been trading some other shares in it up and down for the last month.
Okay, so you're a short-term player or more medium to longer term? Sorry, I think I've lost Matt. But anyway, we'll go ahead with answering your question anyway, Matt.
Yeah, look, it looks like a lovely trend on this stock. Beautiful. So if you managed to get into this stock on the trend, now this is the monthly chart, so we're obviously just looking at the landscape here. And there's no reason to say right now, given the strength, that it's going to stop straight away. It might continue to trend up.
It does look
this
excellent,
week's
doesn't it?
close so far. If it closes at the end of the week high and then continues on, well, you know, it could go quite a way. But I like it.
I do like it at the moment. I think it's a great pick, Matt. I think. And if would you mean more medium or longer term or short term on this?
Well, look, I think it's already been trending up for the medium term already. So from right now, if you were trying to get into it, so we'll just
Don't play
fight
hands.
over
Don't
the
touch my
mouse.
hands. My wife will smack me.
Look, it's yours.
Okay.
I'll be polite.
No, I was just looking at because he made an interesting comment. Matt said it's more of a trading stock. Do you think this is more of a trading stock?
Yeah, I'd agree.
Okay.
Just because of the way that it's quite volatile.
So what? Yes. Okay. So what do you mean by that?
That doesn't mean the way he's thinking about trading stock, people think in and out, you know, really short term. But it doesn't have to be really short term. You just let the stock tell you what it's going to be.
Gotcha.
You might go into it with a short term plan.
Yeah.
But if the weekly chart's trending, why would you get out of it?
Yeah, correct. And I think this is looking good. I think this is quite nice and sustainable. So I wouldn't be getting out of it. But you know, eventually all runs come to an end, don't they?
Well, that's true. You've got to be prepared for that with some good rules.
You do. So that's all we've got for Pilbara for the stock, is it? So did I say the stock code right?
That's right, yes. Our next email is from Nish. Hi, Dale and Janine. I love your show, and both of you have given a good insight into the ASX. Please keep the shows coming. Could you please look into Kogan? I bought a few stocks at 11.71 in August 2021. The share price has been falling since then. Could you please advise if I should still be holding onto this or dispose at a loss to find a better opportunity, or buy more to average the cost? Much appreciated, Nish. Really
I think
good
you better
question.
answer, Nish, because I'm in a bad mood.
Should we buy more to average the cost? I think the answer is definitely no. We're not into dollar cost averaging at all, and it's like I was explaining to someone the other day that was talking to me about their business. You know, if your business is going really well, then you've got a real selling point to sell your business. But if the share price or the value of your business is falling, then why would someone want to keep investing in it? But when it comes to the stock market, people think that that's the way you do it because the industry have told people to do it. But I think where dollar cost averaging has really got some justification over time is more when they're talking about the bigger stocks. So, you know, with bigger stocks, the bigger, more liquid stocks that pay good dividends, I think that's where it's really come from. But people try to apply it to all sorts of stocks, even illiquid.
It's a case of the investors believing that they should be doing what the big end of town do, and they don't. And you're actually better off if you don't do what the big end of town do.
Yep.
You know, you have them following it because the big end of town, they dribble feed into the stocks all the time because they've got too much money. We don't have to worry about that. But I mean, it's like the analogy I'm thinking of is if you're driving a car and your brakes give away, you're going to put your foot on the accelerator, or you're going to take it off.
Yeah.
Like, you don't want to accelerate the downward move, do you? You don't want to, buy more of a stock that you're already losing money on. So I would have been out of this stock ages. Actually, I wouldn't have even bought this stock.
Well, this client was telling me that they sold their business, and so they sold it at a high, so it was doing really well. So therefore, you know, it's going to continue to do well, more than likely. But if the business was doing poorly, would you then go and buy a friend's business if it wasn't doing well?
No, I wouldn't do that. So look, just quickly on the chart, because we didn't really talk about the chart, did we? So at the moment we've seen it moved really heavily down from $25 down to around that sort of $8 mark. So there's really no reason to have bought this stock back in August. It was just a sideways movement, and right now it does look terrible, doesn't it?
Well, look, I mean, it just depends on where exactly they bought, I think, because in
in
here,
August.
That's August. So to me, that there was some reason to be purchasing the stock there in August, but it then fell away quickly. So you'd need a tight stop loss on it. That's the point, I think, to make.
All right, well, moving on, we do have another question. This one's from Akther. I think I said that right. Hi, I got into AGL last year at around $17. The strategy was to hold it for a long time, and I kept averaging down to $9.77. Now I'm not sure I should hold, buy more, or sell it and take the loss. What's gone wrong with AGL? Where do you see it in the next few years? Thank you, Akther. Interesting.
Yeah, look, AGL, it just continued to fall down. I mean, we have been talking about this on the show as a stock to watch and to wait for. I guess the point, it's not really about what's going wrong in the industry, it's more about the strategy that the person's taking. I think that's the important thing. So the dollar cost averaging thing is a big high risk strategy to take.
Risk.
Not only that, when the stock was purchased, maybe it was starting to go up then, maybe it was on its way down already. But once it took out this low here, that was a clear sign that the trend, that longer term trend, was going to continue to fall. So we just look at the chart and see that low there. Once that was taken out, so back here on the monthly chart, this was the low. So the chart's constantly giving you reasons and telling you what's happening with the stock, and that the big money was getting out of it.
Yeah, the big money was getting it. And that's what a lot of people don't realise. And if I can have the...
Because it takes a lot of money to push AGL down.
It does.
So therefore, if the big money's pushing it down, why would we be in it?
The reason, this is why people should read my book and really understand why they should be dollar cost averaging, because and you'll have to do the actual calculations yourself, mate. But if you look at what you purchased at $17, okay, and then look at all the other purchases you've made to average down to $9.77, and look at how much this point in time you're in the loss situation. If all you've done is sold at 17 and had all the money that you put in as your dollar cost averaging down, and then just put it in right now after, or not right now, but wait for it to bottom, and you'd actually make far more money by the time it got back up to 9.77 than by doing what you've actually done. And you're losing also opportunity to be in stocks going up. Now, I can 100% guarantee you that if I ask you, would you rather be in stocks going this way or this way, you're going to say this way. So that means don't keep buying stocks as they keep falling, because you're buying stocks going that way, which is not really where you want to be.
Yeah, exactly.
So that's it for this stock.
Okay, terrific.
AGL.
I think it's about time we take another caller.
Okay, fantastic.
All right, we've actually got Pendai on the line. Hello, Pendai. Welcome to the show. How are you this evening?
Hi, Janine. I'm good, thanks. How are you?
Good, thank you. Good to have you on the show tonight. Would you mind telling us what your question is tonight, please?
So, Janine, I was just asking about two stocks. I've got BPT and Soyana. I just wanted your thoughts about those shares, whether I should keep them or because, they've been trending down like since I bought them like 2 months ago. So I just wanted the thoughts as to just advise.
Okay, so SYA, you said, is the stock code?
SYA.
Okay, and your original reason for purchasing those shares, was it a long-term proposition or was it short-term originally?
Well, I really wanted the short-term, to be honest.
Yeah, okay, look, I appreciate your honesty. Thank you so much for calling in, and we're going to have a look at the stock for you now. All right, there on the screen you can see we've got Sayona Mining, SYA. Now, this stock is actually really, I'm not sure if it was a backdoor listing at some point.
Probably was, yeah.
Because of this arrangement here, and then it's just tracked along the lows. But I actually think it looks good from what it's done recently. In the short term, yes, it's actually come down for a couple of months, but longer term, I actually think it looks nice. If you are intending on trading short term, Pendai, the challenge is that if your term for trading is short term, and the stock keeps trending and it goes up, then it can turn into a medium-term trade, which can be great because you can make more money. But if your intention is to trade short-term and then it starts going against you, that's where you've got to have that real internal fortitude and develop that confidence to be able to just say, right, let it go. And here, the stock has pulled back, but I don't think it's, a big deal just yet, because it's actually reversed this week.
It has.
It's trading at the top of its bar this week.
But didn't she say she's bought it and it's been trending down since?
She did, yeah.
Yeah. So that to me suggests that she doesn't have good buy rules.
Okay.
because obviously if she's bought it and it's travelled down, her buy rules aren't that good. She need to tighten up the buy rules.
But look, I don't actually have a problem with where. Can I just grab the mouse again?
Well,
I didn't want to slap your hand there to get you to move. But look, if she bought in September, let's say,
we don't know.
But she said it's been trending down since. So we're just assuming that she's picked it up at the top. That was actually a really strong move, and I think that was a potential reason to.
Well, what if she'd bought it only 3 weeks ago?
Well, if she picked it up here, no, because it was already moving down, and that's the problem. You need to have the momentum with you. So there would have been nothing wrong with that, but I guess the challenge for her is the stop loss, really.
Yeah.
Deciding.
And if you're trading short term, you have to have a stop loss. It's just
I think it's more than that though, and I found this when we did live workshops in talking to people, that people would think, oh yeah, everyone says you've got to set a stop loss. And people talk about the percentages for the stop loss, but the thing that I realised years ago that I started really counselling people on, and we put it into our course so that people were not just thinking about the percentages, but they were thinking about the dollar amount.
Yeah.
So when we were at workshops, I'd say to people, everybody put your hand up and then put your hand down if risking $50 is too much. How about $500? Is that too much for a trade? It went up to 1,000 and hands would slowly come down. So I think really, Pendai, what you need to do is before you go into a trade, you need to ask yourself, how much money am I willing to risk? And then start reading Dale's books and get some good rules behind you so that you can actually make really good educated decisions on the stop losses that you set.
Yeah.
Yep.
That's it for this stock. Now we do have another caller on the line, so we've got a busy night on the phones, and I believe we have Simon on the phone. Simon, are you there?
Yes, I am.
Fantastic. Where are you from, Simon?
Brisbane.
Another Brisbane person. Well done. Well, the other one was on the Gold Coast. That's close enough, isn't it? So, and you're probably a good-looking dude as well. I better say that, otherwise you might feel left out. You got a question for us tonight, Simon?
Yeah, I just wanted your thoughts on NAB, so National Australia Bank.
Yep.
Because it's, I guess the trend to me looks like it's changing a little bit, though I think the overall trend is still positive, but just the recent, I guess the trend is changing, and just your thoughts in the short, medium term, what it's like, and then the long term.
Okay, do you actually own NAB?
Yeah.
That's a no. So okay, so you're looking to hold it for medium term or long term or what?
Possibly for the medium term. Like I'm maybe thinking of pulling out to maybe buy some other shares, I guess.
Why would you be doing that? Why would you want to pull out the other shares?
Because I think other shares might have a better opportunity for the long term.
Okay, and how would you be determining that?
Just mainly focusing on the trends, and then some, obviously, fundamental analysis as well.
Okay.
So I just thought maybe at this point in time, I'm thinking NAB might end up going in the short term, might be dropping off a little bit, and then maybe I could sell that and then buy something that might have a potential.
Okay, well, we'll get into the charts for you now, Simon.
All right, now that's an interesting one. I like it because he's talking about trends. So Simon, I mean, I think it's sometimes, people get to a point and they just want to hold banks regardless.
Yep.
So I like the fact that he's actually thinking about, should I be selling now? When we're looking at the chart though, NAB, yes, has been in a beautiful trend. The trend is only just starting to show early signs that it might be changing. So this month it started to turn down, but there's a lot of resistance across here as to why, but all the banks have turned down.
Correct,
now.
they all have turned down at the moment.
So it's happening across the space. So that's often an indicator of what could happen if all the banks a couple of the banks start turning down. Generally, they'll all start turning down. But I don't necessarily think that his idea about taking I don't disagree with him about selling the stock, because if he's got a rule to sell it, I don't think it should just be based on a whim, like I should sell it to put it in something else. Yep. But we do say to put money into stocks that are trending up. Okay?
Correct.
And if you've got a trend line on that, there's possible that it may be an exit on a trend line this week. Now, I don't know if he's considered those sorts of rules on it. It doesn't sound like he has.
He's talking about trends, but I mean, the golden rule is to buy on confirmation and sell on confirmation, not a guess.
That's right.
And I'm not saying he's guessing, but you know what I mean. It's like, I think this is not an answer.
See, bank stocks are really good on. This is where your book can really help people who are trading bank stocks, because it can be really good for bank shares to look at these sorts of strategies. But I would, if I had money allocated to a bank, I wouldn't necessarily go and just dump it into something else. I'd be sitting there really patiently watching the banks right now. If you're thinking about getting out, that's your call, and it's fine to do that. I don't blame you to be thinking about that. It's good. But I would also be looking at, well, when am I going to be able to get back in, and wanting to have that money there ready and be patient.
All too often somebody switches out of one stock thinking they're going to get more money in another stock.
I've done it before.
And it bites them in the bum, doesn't it?
Yeah, that's right.
All right, well, that's it for NAB. Now, before we get into the topic for tonight, if you are enjoying the show, then please hit the big like button, give us a thumbs up so others can find it and enjoy the show too. Now, if you are keen on understanding the stock market, then go to our website, wealthwithin.com.au. There are lots of free articles there. And you can also get a copy of my first book, How to Beat the Managed Funds by 20% for free. All you got to do is pay the shipping. Now, later on in the show, we're going to give you another opportunity to call into the show like those people and ask Janine and I your most burning questions. So stay tuned for this opportunity, and more importantly, be ready to dial when we tell you to. All right, now it's time to get into tonight's topic, which is top 10 growth stocks to buy in 2022.
One high-performing stock can make a significant difference to your portfolio's profitability. Imagine buying 10 of the top growth stocks in 2022 and how this might change your life. Tonight we're going to give you a head start as we share tips about stock selection while reviewing the stocks that we believe have great potential for growth.
All right, now a good growth stock is one that trends well and shows a good growth forecast in its earnings. Now, you can find growth stocks in a number of different indices, from the top 20, mid-cap 50, top 100, and even in the top 200 shares. Just remember, you will take on significant risk if you buy stocks outside of these indices.
So let's get into the stocks charts to explain this and examine a handful of stocks that fit our criteria.
This is where I've got to do the drum roll?
I think you should.
Okay, well, let's get into the charts right now.
Now, first of all, I wanted to just say that when we're looking at these stocks, we're looking at important criteria. It's not just all about growth, okay?
Okay.
It'd be nice to have some stocks that we choose that are growth stocks that have a dividend as well. But we're not holding out for the dividend is the important point to make.
No, we're not, because I think so many people give a lot of weight onto dividends when growth is so much better.
Yeah.
It's where you make all your money in growth. You don't make it in dividends.
Yeah, and so the issue is we're looking for good earnings growth potential, but that's what we currently know. I mean, the companies could turn around and tell us something different in 2, 3, 6 months' time, and so therefore the stock mix could be different.
Okay, so we're looking for like double-digit earnings growth, that sort of stuff, year on year?
Not necessarily. It depends on the stock itself. Ideally, that would be great, but we're not necessarily going to get that in all of the growth-type stocks going forward, but earnings growth.
All right, so let's look at the charts before I...
Now, this one might surprise a few people, okay? So I've gone through and I've tried to find stocks in different sectors, so we've got a mix of stocks across different areas.
Okay.
Now, normally my picks would be things like Rio and BHP, but I thought I don't want to sound like an old wheel turning around talking about the same stocks. So I've picked some different ones to talk about. So GPT is in the property space.
Yes.
And I quite like it from a technical perspective.
Can I ask a question? You said dividends on the chart. You're saying dividends slightly above market, UNF. What's a UNF?
Unfranked.
Oh, okay.
That was my lingo.
I was going to say, is that a new sturdy word or something?
Yep, I was hoping you would ask that.
Okay.
So what I'd looked for was, I was looking at the dividends, but because the dividend wasn't a specific criteria, it was just nice to note where the dividends are. But it'll be interesting to see how the dividends vary across stocks. Now, we haven't actually got the specifics of dividend returns here, but this is for you at home to do your own research on these stocks yourself if you think that they're worth having a look at.
Yeah.
So
GPT
growth, good earnings growth potential going forward. Now, it's also important to bear in mind that companies have their announcements at different times of the year. They'll update the market, and these types of stocks, property-type stocks, tend to pay dividends more regularly than other stocks on the market. So that might be something interesting for people as well.
Okay.
But looking at this stock here, what I've noticed is that a lot of the property stocks are still miles below their GFC highs, the all-time highs. And so I'm seeing from a technical perspective, there's a huge potential upside here. Okay. Now, I'm not saying it's money, it's a given, because nothing is certain in the stock market. It's all about what the chart is telling you at the time. But at the moment, it started to trend. We've started to see these nice gradual trends, but these are not going to shoot the lights out
Okay.
at the moment. We've seen the industrial type stocks like GMG, which we love, have just actually gone gangbusters and gone up. But how much more upside are we going to see in those types of stocks in the short term? That's a question.
Okay, next.
So GPT's got a bit of a mix of exposure, which is good. So Amcor's actually broken out of this significant consolidation for a while, and it's pulled back again. Now, I'm not saying that this is going to keep going up. There's a risk at the moment to the downside. It could fall away. But the dividend for this stock is currently around the market average, which is nice to see. It's got good earnings growth potential, so that's another one. Now, I think that it's just been pushing higher. You'll notice that that these lows are pushing higher. It's trying to go higher. It's attempted to break out, because eventually this is what stocks will do, try to push higher out of these highs here, or just fall away, give up the ghost and fall away. But I think that this one looks quite interesting, and it's one that we've got on our list.
All right, next.
All right, so next one is Santos. Now, this is higher risk.
I'd hope you put that one in there.
Yep. Now, I need to just sort of preface this to say, even though it's a big stock, there are some big stocks that we classed as being, it's not high risk, but it has a higher risk than, say, a bank stock or a Coles or Woolies, those types of shares, because of the volatility. And you can see that on the charts. We can see here, let's just have a look at what happened during COVID, just as a comparison. Remember on previous shows, we've talked to you about having a look at how stocks have fared during COVID versus the overall market.
Correct.
This has fallen more. Yep. And so we're seeing dividends well below the market average. Now, this is typical.
I don't know what market F means. What does that mean?
That's not a swear word.
It's not another.
That's franked.
Okay.
Meet our friend Frank. So this is, I thought this was my type of joke. I told you my jokes are dry. What can I say?
Keep going. We'll never get there. We'll be Christmas before we get there.
Okay, so the dividend's well below market. Okay, good earnings growth potential, but the trend or the direction that the share is trading in has to be, aligned with the rest of the story. And currently, we're not seeing that. We've seen this really choppy sideways move in the short term. We need it to start moving back up before that's the case. Oz Minerals a great stock. That's just a lovely share. I think that's got more significant upside. You can see it's still well below their GFC high, and I think that this is a really great stock. Dividends well below market average, but you'd expect that for a growth type share, and especially in the mining space. Good earnings growth potential ahead. But it's just important to keep an eye on that. Keep an eye on what the companies are saying out there when they make announcements, because it can change at any time. Okay, so Bank of Queensland, you might be surprised that I picked this one.
I was a little bit surprised, but you did talk about that the other week.
Yeah, so second-tier banks are actually quite good at times, because they can often indicate what's going to happen on with the bigger banks. Now, what I've noted this time is it's following in line with Westpac. So the movements on this share have been quite volatile to the downside, like Westpac, which I also like. But I can see this stock looks to me, people might think, all they've heard that it's falling dramatically. But I just think this looks great from a long-term picture perspective. But at the moment, the short-term direction's down, so the risk is to the downside. So therefore, it's just a watch, obviously.
But it could outstrip the market over the next 12 months.
Yep. So the dividend at the moment's well below the market, and it's a frank dividend, which investors often like, but it's got good potential for growth. Yep. Now, the next DC is the data centre.
Data centres, cloud computing, I love that sort of stuff.
All good, but it actually looks like it's really slowed down a lot right now, and there could be significant risk to the downside at the moment. So I'm not saying that this is a buy right now. The dividend, I don't know what their dividends are going forward. Good earnings growth potential for this stock, though.
It's not falling away, which suggests its earnings is probably catching up with its price.
Potentially, but I just think that this to me is really risky right now, and if it starts trading down, it could fall significantly. So I'd just be watching that for now and just waiting to see if it moves further to the upside. If it starts moving up again, could be quite nice.
All right, what have we got next?
Okay, so I've actually covered off 5, so we're just going to flick through the last ones. Now, this one's got a dividend lower than the market growth. So Northern Star is actually quite a popular
you'd expect
stock.
That anyway.
Yeah, and if we look at the gold stocks at the moment, they all look very similar. So, and I've actually, because we're actually covering this off for someone who's written in tonight, I'm not going to mention too much more about it.
Keep moving on then.
We've got it on the list. Wesfarmers. Now, Wesfarmers is one of my favourite stocks for anyone who watches this show. absolute favourite. However, it's to the downside right now, and I'm not sure whether it's going to take out that low as well. It could do. So I'd just be watching right now quietly. Earnings growth potential, question mark. I don't know what's happening with Wesfarmers right now.
Okay.
It's a company that's got massive potential in terms of the capital that it's got available to deploy. But what are they doing?
So you're saying the first 5 stocks are more your hotter ones?
Yep.
And these ones are really interesting?
They're really interesting. I'd have them on the list, yeah.
Okay, so the next 2?
This one here, Westpac Bank,
Yep.
It's one of my favourites. As I said, you like ANZ as well. I think Westpac looks like it's close to falling. If it falls any further, I'd have to go and completely reassess where I think this bank's going.
Yep.
So that's with Westpac, but it's got dividends above the market and it's fully franked and it's got good earnings growth potential at the moment. So we're looking at ALS or ALQ as the last one. Now I'm just going to open up the monthly chart on this one. So it's dividends well below the market average and it's a franked dividend, good earnings growth potential. Now this has got some resistance, right? Because it's just gone through you remember all the mining stocks made highs in 2011?
Yeah.
This one actually went on to 2012 and it's fallen away heavily into the lows around 2016, which is when a lot of the mining stocks bottomed. COVID's actually pulled it back quite strongly. It's moved up really nicely. It's not as big as some of these other stocks, not as liquid, of course, but it's gone through that all-time high, and that's important. So I'd just be letting it settle down. It's not a buy right now, but it's definitely one of those ones that could be opportunity for 2022.
I don't think if it doesn't come back too much, I think the next 12 months will look good on that stock.
Yeah.
I think it'll do really, really well. Just
Okay.
a bit short-term weakness. All right. Well, remember that one growth portfolio can vary from another growth portfolio. You just need to be really, really careful about what you're making sure you set or decide to set the criteria that you have for your portfolio. And this is where being really skilled and very well educated will allow you to make much better decisions at a lower risk, or much better lower risk decisions. And also one critical area we believe really is important for any investor selecting any growth stocks is that they must trend well. So that is it for our topic for tonight. Now, before we get into our next email, I do hope you've all have your phone ready and been patiently waiting for the opportunity to call into the show to ask Janine and I your most burning questions. So now's the time to get you dialing. The number you need to dial is 0392909988. That's 0392909988. So pick up your phone and get dialing now.
While you call us, we will get into answering the next email, so call now.
All right.
Now we have a question from Zara. Hi Dale and Janine, great show. I subscribed to your channel a month or so ago and binge watched many episodes and loved it. Can I get your thoughts on MAH Mining Services Company? It's been on the downtrend for a while now. I bought it at 22 cents. Thank you, Zara. Wow, she binge watched our show.
Oh, sick puppy.
Hope she had lots of chips, to eat there while she's
I would
watching
have had
away.
a cattle prod to keep me awake.
I know, sometimes I find it hard watching, us on the replay.
I know, but anyway, but binge watching.
That's watching
anyway.
yourself.
I mean, people binge listen to our podcasts all the time. They're talking about podcasts. So
I remember one person downloaded all the episodes and just listened to them one after the other.
1,000 times they would have been listening to you.
Amazing. Anyway.
Let's get to the stock.
Now, can you say the name of this stock for me?
I've got to put my glasses on. I can tell you it's McMahon Holdings.
Well done. I was hoping to trip him up. It didn't work.
It's quite a liquid.
Yeah. Okay. Now, it is quite a liquid. You can see that from the messy looking chart on the right-hand side. So that's often a good indicator of whether this should be a stock that you're trading or not. Plus, it's trading at it's been trading at well below $1. 18, 17 cents. So often a stock that's trading at these sort of prices will be highly illiquid. High risk is what I would say about the liquidity of it. And at the moment, it looks like it's going to trend lower. I think right now, the real risk, I'm just going to switch to the monthly chart because I just don't like the look of that weekly chart at all. I think the real thing with this stock is it has to trade above this high here at 24.3 cents. If it doesn't get through there, then it's more likely to just keep tracking down.
Yeah, well, she bought it at 22 cents, and what's it trading at now?
It's below 27. It's been at 17, 18 cents.
17, yeah. So I'd be really, really careful and putting my stop loss underneath all of that because you don't want to hold on to that, if it starts falling any lower.
Yeah,
because you will lose money pretty fast on it.
Yeah, particularly if it goes through that low there, I'd be really concerned about it.
Well, that's a fairly big loss from 22 cents, though. You're
it
talking
is.
about 10%, it's 2 cents.
Yeah, I know. And that's the problem with some of these little shares, because on the chart it doesn't look like it's moved much, but it actually has in percentage terms.
Yeah,
look, I think that it's high risk and it's not something that you want to be trading. Really be careful about this one and make sure that you've got your stop loss in place and make a good decision. And then if you do choose to get back into it, just know how you're going to get out of it. Is all I would say.
Yeah, because you do need to be an experienced person to trade stocks like this. You need to have some good rules. So now we do have a question from Chris, who says, "Hi Janine and Dale. Janine, I'd like to thank you for your sage advice you're offering regarding the dual listing of VUL. It forewarned me. Now Dale, I would like to thank you for your publications and the assertions contained within allowed me to buy and sell my VUL shares at the behest of my trading plan, no second guessing. A very handsome outcome was achieved. I'm a fundamentals type of guy who likes to read annual general reports, although some should be categorised as adult fiction. My question, where do shareholders fit into the scheme of things from reading the reports? And from my podcast, my perceptions are that shareholders are the elephant in the room, or to be more succinct, they are not to be mentioned in polite company. Am I being precious?"
So it's more about the reports and how do shareholders fit into all of that? Like, they don't write these things for people average person to understand
annual reports are the sort of, it's a marketing document. It's really what the company, they've got requirements. They have to, ASIC requirements and those sorts of things they've got to put into them, but they're really, they're cleverly worded.
These days they do presentations, they're recorded online, and can't you watch those? And I think that would go hand in hand with the report.
They don't have these annual general meetings and they don't know what's going to happen in them. That just doesn't happen. You don't see the chairman of a board, you do not see a CEO or a managing director go into any of these shareholder meetings not knowing exactly what's going to happen. There's no surprises in that. They already know if there's got things to be voted on that they've got the vote. There's nothing going to happen. And they allow people to ask questions.
But I think it's good because it can help people understand what they're reading in a document. Not everybody wants to read that annual report.
I don't want to read them.
But this guy does, so he's different, isn't he?
Well, I don't know. He said some of them are adult fiction, didn't he? So sick puppy if you read a lot of annual reports. Because I just when I read annual reports, I just find them, I just fall asleep. I really do. Because a lot of them don't tell you what. They tell you stuff, but they don't tell you stuff. And I
like the investor presentations though, because often they'll have a nice summary at the start and when you're reading through, and then they'll run through the detail underneath.
So the question is, how important is the shareholder and all that? Because that's really the guts of the question. So as an individual owning shares in a company, are you really that important to the company?
I think it depends on the company.
Okay, qualify that statement, please.
Well, look, I mean, BHP put out a whole lot of marketing material at one stage and it could depend on the timing, but I think BHP takes their shareholders seriously.
So retail shareholders?
I do.
Yeah. So that doesn't, you're implying that doesn't go for all companies?
Look, I'm saying that shareholders are supposed to be put first, but are you sort of trying to get me to say that the institutional shareholders are more important?
No, I'm just trying to create an argument
trying
with
to
the
set me
boxing
up,
gloves and everything else, because that's what they like. They like us to debate. So it's like, I'm just saying is, are all companies like that, or are they just go...
I can't comment on whether all companies are like that.
No, but I mean, you're looking at the big shareholders.
I'm going to take the politician's seat right now.
I'm trying, people. I am really, really trying, and sometimes my wife tells me I'm too trying. Okay, our next email that we have tonight is from Letitia. Now she says, "Hi, Dale and Janine. Thank you for your fabulous job you are doing. I am really benefiting. I bought these two shares 5 months ago, Gem and OpenPay. They seem to continue going down. Do you see them coming back? Should I get rid of them before I lose all the money, all the invested money? Many thanks, Letitia." Good question. So that's the first time we've had somebody saying, should I keep them or get out of them or lose more money?
Look, I think that with Gem, I think it looks interesting. And I looked back where Letitia bought about 5 months ago. I'm not sure if she bought on any sort of rules, but back in June there probably was some reason to purchase it, technically, right? And since then it's just gone sideways. I don't think it's a big concern right now at all. I think if this stock gets back up and it goes through this high here that I'm showing $1.20, this could be very interesting. So I think it's worth a watch.
Yeah, it could be really, really worth a watch. Now, while we're talking about this stock, if people do want to call into the show, remember the number is 0392909988. Pick up your phone now and give us a call on Janine. I would love to chat to you and answer your questions. But let's go and have a bit more of a look at this stock.
I'm glad you said that, because I would have told you off if we just moved on and didn't answer the question properly.
I know, I just thought I'd slip that in. Because I know you we love talking to people on the phone, don't we? I think, you like talking to people on the phone. I like talking anyway.
Fantastic.
Shut up, Dale, and get back to the stock.
So see this September low here?
Okay.
If the stock takes out that low, that's a real concern. So that low is 93 cents.
Yep.
That's what we, hope this stock doesn't, but it may do. So you've just got to be mindful of that.
So to answer her question, she said, hold on or sell out.
Well, she's got to have rules. So if she's asking us to make that...
That's not the question. I said, hold on or sell out.
Well, look, if I was holding this stock, I'd still be holding it.
Don't sit on the fence, you get a sore backside. And I used the right word.
I'm not going to just respond to that with anything. Next, we have a question from George. Hi, Dale and Janine and team. Using NST as one example, on the monthly chart, is there any direct correlation between the price rise past May 2019 and volatility, as volume's fairly stable? Or can this be linked to exhaustive buying at the top, as it did trend beautifully from back 2015? Does it get noisy at the top? Your thoughts are always appreciated, and it's still on my watch list for further analysis above 11/60th. Thanks, George. Love his question. Great stock. This is one on our watch list. Yes.
Can I answer it? I think when we get questions like that, people think that stock has the same emotions and the same, should I say, mentality at every stage of a trend. And they don't, and that's what people don't understand. They don't look at the emotional side of the stock, and that's what the charts actually tell us. And obviously George is talking about the chart from that point of view, which is good. He's noticed stuff on the chart.
Yep.
But at the bottom of the trend, at the real bottom, if a stock like AGL, it's fallen so heavily, what are people thinking about? Are they bullish? Are they bearish? Are they nervous? Are they unsure about it? What are they doing?
It depends on how they filter the world.
Correct. But if something's gone up 200-300%, how are they thinking about a stock?
Differently.
It's completely different psychology associated with that stock. Now, let's say the stock that's gone up hundreds of percent come off a little bit, 10 or 15%. What is the psychology doing?
They're not too concerned about it.
They're not too concerned about it. If it falls 15 or 20, what happens?
People start to get a bit worried.
They get a bit worried. So things happen, and that's really where I understand your question, mate. It's really but comparing that trend to the top. You can't necessarily compare that top to the trend and things like that. That's really what I'm saying is tops are normally get messy quite often. It's just the nature of it, because when a stock comes off 10 or 15%, some people go, wow, it's cheaper, I can get in and buy in.
But I like his thinking though, right?
But I do like the thinking.
Because he's talking about from this period here in May 2009. I'm just going to expand the chart up, because it was trending beautifully prior to that. It just tracked up nicely, and all of a sudden this was the signature that told you that something was changing, that fall into 2019. And then it tried to do it again, and then COVID hit. So straight away the personality of the stocks changed. And that should give people a warning enough when they look at the chart to know that, hey, I have to be a bit more mindful when I'm trading this stock. If I wasn't setting stop losses on it before, I surely better do now. And then the stock's taken off and started to fall. So a trend line may have come in handy on this one further down the track. But I think it's starting to look interesting right now. There's a bit of volatility short term, but gee, there's a nice level under all of that.
There is, isn't it?
Just across there. If I put the crosshair on it, you can see it there.
So I like the way George is thinking. I like that he's actually thinking about.
And he's thinking about levels, about where it's like going to look interesting for him as well.
Well done, George. But I think it's time we've got another caller on the line. But I think it's Mohit. Is Mohit on the line?
Yes, that's right.
Fantastic. Where are you from, Mohit?
Darwin.
Darwin. Awesome.
Yes.
Fantastic to have you on our show from Darwin. I've never been there and always wanted to go. So maybe you can buy me a beer one day when I visit.
For sure, among Crocs.
Fantastic. You have a question for us tonight, Mohit?
Yes, I did. This is regards to the thoughts on BHP's future as it disinvests from oil and gas space. As we all know, it's announced a merger with basically selling off its assets to Woodside.
Yes.
And it's moved to a future metal strategy. So what do you see as a big, large market cap, a company like a BHP in terms of its future? And what will be its fair price to buy?
Whoa, big question there,
Wow.
Mohi. So it implies you actually don't own it at the moment, but you are looking at buying it for your portfolio. Is that correct?
So this is a long-term hold for me.
Yep.
I presently have certain positions,
Okay.
but I would like to further increase my positions on this particular stock.
Okay, fantastic. Well, thank you for calling from Darwin. I'll let Janine get in to answer your question.
Actually, you asked some really good questions there to clarify things. First of all, I love Darwin, and I went there. You haven't been
I know
there.
you swam with a crocodile.
I did. It was one of my bucket list items was to get into the water with a crocodile, and I was in a tank with a couple of crocodiles, but you're actually in a plastic enclosure, and you just kind of hope that the whole mechanism doesn't break while you happen to be in there with it.
I've eaten a crocodile.
But it was lots of fun. It was good.
Yeah.
Yeah, well, that's fantastic. How did you enjoy it? Was it like chicken?
Well, I thought I better eat it before it eats me, but no, it was a bit tough. It was a bit. I asked for a crocodile and I said, make it snappy.
You were Crocodile Dundee, were you, at that
something
moment?
like that anyway.
All right, now looking at the chart.
BHP.
Okay, I still really like BHP regardless of what they're doing. I think they're moving in the right direction. That's my first point. Would I buy more right now? Because he was talking about potentially purchasing more. So I was really glad that you asked that question. But I don't see any reason to be adding to the position or
Not
buying
right
any
now.
more right now, given the way that it's looking on the charts. So it's too early to tell whether BHP's got further downside or not. But I don't think it's too far away from telling us that.
A lot of these big miners and these companies like this are making a big adjustment to what they're doing, aren't they? I mean,
That's
obviously
right.
Fortescue's come out last week. Fortescue, wasn't it? Went into building a lithium, not lithium, hydrogen. In Queensland, a hydrogen plant. I think it's supposed to be going to be able to supply half of the world's.
Yeah, so the whole energy game is changing, isn't it? So, and BHP's really responded to that, and there are a number of market mechanisms driving all of that. So it's good to see BHP making the move. I still think it's a great company, and I think it's still on top of my list, but I actually prefer Rio at the moment.
All right, so if you want to be like Mohit and give us a call to ask Janine and myself a question, because I know you're sitting there on the edge of your seat burning to ask us a question, give us a call on 92909988. Now we've got another email, and this one is from a good-looking person called Nick, who says, "Hi there, Dale and Janine. I purchased a couple of mining stocks earlier in the year, thinking they might be a hedge against inflation, and felt there was disconnection between gold price and the stock price. Guess what? I was wrong there. Bought RRL in July at $2.59 and SMB at $1.87 in May. Of course, should have had a stop loss, but they are only small plays at $1,000 each. Cheers, Nick." Interesting.
My first question, really good question, Nick, but my first question is, does the amount matter?
No.
So you should treat every trade, regardless of the amount, with the same approach.
He's just made that comment to make himself feel better.
Right.
And I'm not trying to be rude to him, but that's what people do. They justify not having a stop loss going, oh, it's only $1,000.
So if you're going to take a position, why take it at all?
Why take it at all? Correct. So if you're if you're going to trade and not put a stop loss in, then why are you doing that?
But I think it's really good that he's brought this up, and I really thank you for raising this one, Nick, because it's different, and a lot of people do this, and I think it's a really important lesson and an area that people need to really be thinking about. But so the stocks kept falling as after he's traded
Can we
it.
look at the chart, or do you want to keep chatting?
Okay, let's look at the chart.
Okay, let's look at the chart.
All right, on the screen right there. I was looking at the chart. I was just forgetting that
you were
everybody
looking
else
at the
wasn't
chart and
looking at the
chatting
chart.
instead of looking at the chart. So look at the chart.
Okay, so $2.59, I think he said, in July 2021, and it's kept falling. So since then, we've seen it go down, around 30%. So obviously, right then and there, a stop loss is important. And I think the point that we raised with a couple of other shares that we looked at today, as soon as stocks give way to their lows, so this was the low at the time in July, at around 234, I think it is, or 236. That was an indication to say out, because it's likely to continue to fall, which it has, because the trend is so strongly down. And that's the problem with it. There was no indication from the long-term picture that it had started to move back up. So, and I've just done something a little bit extra for him in putting something together. So I've put on the gold chart over the top of this stock, because he mentioned that,
because
gold.
so we can all see
Oh,
it?
sorry, you have to get a magnifier
I've got
out.
glasses on, remember?
Yep. I think your eyesight's, needs correction. Okay, so just looking at this here, you can see that there's this big sideways move in there. This is the gold price that you're seeing on the chart there. And we've seen this stock continue to head down. Now, gold could go down. There's a possibility we could see gold continue down, but at the moment it's holding, whereas this stock has just kept falling the whole time that gold has been far more resilient. And this is, I guess, the problem with investing in some of these sorts of resources plays. You have to really have your wits about you, and you need to make sure that the trend is going with you when you're trading.
And it's also a good learning experience, because often somebody goes, "Oh, this is happening, so I think this will happen or might happen," and that's where we also talk about make sure you confirm what's happening before you do it, and why it's good looking at a chart to do that. Because how many people have said, "Oh, look, I think because inflation's high, this is going to happen," or because gold's up, this is going to happen. And he was talking about a defence against inflation.
We can read things all the time about that sort of talk, but it doesn't necessarily. They don't necessarily be specific when they're talking about that, about what you should do with your money.
And that's what I'm sort of saying. So you just said it better than I did.
Oh, thank you very much.
Cool. So do we have another caller on the line?
Oh, looks like we have another caller on the line, and I think the caller is Pendai again. Pendai, is that you out there? How are you?
Yes, Janine, it's me again.
Fantastic. And you have another question for us tonight, Pendai.
Love talking to you. Janine, I just asking about OPY.
Yes.
I bought this share, I think, like 2-3 months ago.
Right.
And honestly, it's just going down. Just your expert advice whether to sell it or keep it.
Okay, Pendai, now you know what we're going to say, don't you? You need to have your own rules, and you really need to make your own decisions about how you're going to sell. However, we're really happy to give you some insights into this stock and what we think of it. So thank you very much for the call. We look forward to chatting with you again.
Okay, what we're looking at on the stock, is it OpenPay?
Okay, so it's OpenPay Group. Now there was a lot of media about OpenPay at one stage when all of the tech stocks were booming. But since then, we've seen OpenPay just trend down long term. Look, I can see potentially if she did get in sometime back here, it looks like a nice sideways movement, and possibly it was starting to go back up, and then it got sold off heavily. Again, the stock went through its low, so it proved that they were selling it off. And so this is where you've got to really be questioning. Any of these lows that get taken out could indicate that it's likely to fall further.
It is, and it's I mean, tonight we've had a lot of lessons in why stop losses need to be used.
We have.
Yeah, a lot of lessons there, because people...
But what do you do? Like, somebody's trading, they've bought a stock and it's fallen away, they haven't set a stop loss. It's one of those things that their position gets diminished because obviously it's losing value. So do they just keep holding it, or do they just sell it?
No, as three people have said tonight, they've bought more on the way down. So that's one thing we suggest not to do. But to me, if you've got a stock and you've bought it and it starts to fall away after you buy it, you start losing money, why wouldn't you set a stop loss? What would be the reason behind that?
Maybe they've just started watching and just started learning about stop losses.
Okay. What's another reason?
But I mean, if it's continuing to fall, I don't know that that's the issue here. Are you trying to just create a little bit of an argument here?
I've been trying all night. It's not working at the moment. I'm just saying. But why don't people set a stop loss?
People don't set a stop loss because they think it's going to go up, and it's all about that hope and pray and believing that the share price is going to rise.
Okay, so that's
they
one
don't want to be
reason.
wrong.
Number two, they don't want to be wrong, and number three.
Don't like to lose.
Bingo.
Yeah.
They're the three reasons why people don't do it. But they're all three reasons that will keep you being inconsistent in your trading and your investing and actually get you worse. Your returns are worse.
Okay. And so in that situation, that's opened up some things for people to think about.
Yeah.
But when we used to review client portfolios for people, we'd look at the shares. We would say, look, if you're holding a really small position at this point because the share price has fallen, what's the point in selling it now?
Well, that's one thing, yeah, absolutely. Because you've got to look at what there was left of it. Like that person that had the $1,000 position, he's lost 30% roughly on his. But what if they'd fallen 70%?
Well, that's good, isn't it? I mean, it's good to bring up this, right? Because if the stock falls down to here, that's another 62% fall. Could anybody who purchases the stock handle that? And why would you want to?
Yeah, but that's where people tend to have, they start off thinking I'm trading it, but then it turns into a long-term buy and hold where they're not making any money, and then it really plays on the psychology.
Yeah, so
And-
the stock could continue to fall to that low right now, couldn't it?
Yeah, absolutely. This one could fall to that low, absolutely. But when you have a negative outcome like this one, and let's say that does fall to that 62%, when you have a negative outcome like that, it's 10 times worse than having a positive outcome.
Yeah.
It really plays on your mind, and every time you look at your portfolio, you see these stocks that you're losing money on, and it highlights that you've made a poor decision or an incorrect assumption on things and not followed some rules. So to me, it's very much like the Band-Aid. Just rip the Band-Aid off as fast as you can. Like don't sit there and slowly tear it off and really affect your psychology, because then it has you second guessing of the next buy, the next buy, and the next buy. Are you going to get another one of these stocks that falls away? So it's always so much better to just cut your losses short and have that stop
But it
loss
really
underneath
has to be that person's own decision to decide how much they're willing to risk and
Correct.
whether to do it. Because, you know, if they, listening to the show, say, oh, look, Janine and Dale don't like the stock and are saying it could fall further, and they sell it, you know, it's their decision to do that.
Yeah, it's always their decision. We're just telling people to have rules around that and making sure they do. But if they let it fall away, do that because they know that they wanted to let it fall away because they're quite confident in the stock, not because they've just made an error in judgment.
Yeah, okay.
You know, it's a wise person that goes, I got that one wrong. Let's just get out, because it's about how deep your pockets are. You've got to be in the market long enough to get the experience to do it really well. But to do that, you've got to make sure you keep your losses short.
Okay, I'm going to put it to you this way on this stock. What happens if OpenPay trades up and closes right at the top of the bar and trades up strongly off this week's low?
I'm still not getting excited.
No, but
My interest level went up 1 point.
That's right. So we're just watching it then, aren't we?
Correct.
And waiting to see whether it continues to go up or whether it continues
So
to
there's
fall.
two choices here.
Wait for it to see if it goes up.
So you can either manage yourself out of it, or if it keeps going south, then you have more of a loss.
Yeah. So we hope that that gives people insight into how to think about this, but it's about making a decision. Sometimes you've just got to list the pros and the cons. So it's like, what is the benefit of being in the share right now and what might happen? And then what's the downside risk and am I willing to accept it?
And be dispassionate about it.
That's right.
Get somebody else to do it for you. Because you'll be really dispassionate. But thank you, Pendai, for bringing in and giving us these stocks. It does, it really is. Janine, I really do appreciate you ringing in and giving us stock and allowing us to talk like this and sharing our wisdom with you. So please, thank you for doing that. And for anybody else like Pendai, as we're here every single week taking phone calls, so you'll get more chances to do that. But that's our thoughts on OPY for the moment.
If you called into the show and missed out this week, then keep trying, as we'd love to chat with you. Just make sure that you write down your question. Be back here watching the show next week, as you'll get another opportunity to call in when we give you the cue.
All right, remember the best way to have your question answered is to call into the show live between 7 and 8 p.m. Otherwise, you can email your question to us right now whilst it's fresh in your mind. Now, send your emails to info@wealthwithin.com.au. Remember to include Wealth Within Live in the subject line. Also, show your appreciation for the show and those who bring it to you each and every week to help educate and answer your questions. You can do this by subscribing to our channel and also give the show a big thumbs up.
Well, that is it for tonight's show. We hope you not only enjoyed what we presented, but also got great value from our answers to your questions.
Now remember to put this show into your calendar to join us here right live on the Australian Stock Market Show every Tuesday at 7 to 8 p.m.
As always, thank you for joining us and we hope you have a great week. We look forward to you joining us again next week. For now, goodbye, good luck and good trading.